If you're looking for a highly educational market analysis, you're in the right place. This is the Transparent Effects Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight to the charts. In today's video, I will be speaking about GBP USD. Now, why do I want to speak about GBP USD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, first covering the technical aspect, then we will go and see what we have from an order flow perspective, by checking the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment, the market has just tested a quite strong level of previous monthly resistance here, and again here, which the market has now broken to the upside and is currently retesting as support at this level. And as we are testing this previous resistance turn support, we can expect the market to provide a rejection to the upside, possibly even for the creation of a new monthly higher high. Dropping down on the weekly time frame, what do we have? Now here in the weekly, we can see how the market has just tested very strong previous supply and resistance, which has now turned support and demand. And as we are testing this level, we can expect the market to reject it to the upside. Specifically, if we look closer, we can see how we just had a strong impulse followed by this correction. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we basically had a perfect 0.618 golden ratio Fibonacci retracement. The market tested its zone and immediately started rejecting it to the upside. And in fact, here on the weekly, everything seems quite bullish and we can expect more continuation to the upside. So on the weekly, everything seems bullish and we can expect more continuation. Dropping down on the daily time frame, what do we have? Now here in the daily, we can see how the market first created this W formation, and after the creation of a W, you want to see the market go and complete the pattern at the neckline, which is the previous resistance turn support, before then printing the continuation to the upside, completing the impulse correction and impulse pattern to the upside. And in fact, we can see how so far that is exactly what the market has been doing. We just had the completion of the W formation at the neckline, which is the previous resistance turn support, and from here we can expect more continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.382 here, 50% here, and 0.618 here, meaning that the area of interest in order for the market to create a reversal and continuation to the upside is this one here, which is where we will be focusing our attention. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing, we can see how lately net positions have been increased. In fact, we went from having minus 57k net positions all the way up to having minus 23k net positions. Now, lately we have seen some drop. However, what we can see is that since we have just approached strong support and demand, and we already had a pattern of increasing the net positions, we could see more institutional buying inside of this area for the continuation to the upside to then be created. So the way in which we will be approaching this potential longing opportunity with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective instead of this area waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market, and if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. We are currently running a special promotion, and obviously in the mentorship program, first you learn all the rules of the strategies, then you also get a daily market breakdown every day showing you which pairs I'm looking for according to the rules of the strategies, and you also have the possibility to ask questions and get the answers every single day. So it's a very interesting program and complete program. The link is in the description. To find out more about the special promotion, go and check it out, and I will see you in it.